And hi everyone, it's Stuart here again, and welcome to the prop trade .com. This is version 2. It's my first live presentation since we've had our upgrade a week or so ago. So just bear with me. It's also a very quiet session. We've had that major outage from the Chicago Mercantile Exchange overnight. Power problems in Dallas on one of their data centers. It just shows how vulnerable we all are, whether you're trading, whether you're doing any other normal type of business, to the vagrancies of the electricity supply. Dallas, the center of some of the CME data cells that have gone down overnight. I've just logged back in, so I'm not quite sure if it's still back up and running. If you log on to the CME site here, guys, you can see that note from this morning is still. So Cyrus One data centers down in Dallas working to resolve this issue in the near term. We'll advise clients of pre-open details as soon as they are available. They're talking obviously about the US market. The US market is due to open in the cash market, that is due to open in an hour or so at 14:30 GMT. It's 1:30 here in London. And obviously CME, the Chicago Mercantile Exchange, is responsible for lots of the options, the futures market, and lots of the derivative markets, which lots of brokers use to offer prices. So obviously we've limited our exposure and your exposure as well, guys, remember, to the market. So gold wasn't trading earlier. We disabled that, and I think that's still disabled as far as I'm aware. Let me just check gold. Yeah, there's probably no gold prices available. It looks like it actually might be open, but be careful trading these markets on a day like this. The other big thing as well, remember, guys, it was a major holiday yesterday in the US. We've had a shortened week. Japan was closed on Monday. Lots of movement on the yen. More on that later. Japan was closed on Monday for a holiday. Major holiday in the United States yesterday. Thanksgiving, as you all know, I'm sure. It's Black Friday today, so big shop across the world. Europe's in full swing. I've just been out here in London this morning, and it was busy on the streets. Not that busy, but the footfall was still elevated above a normal Friday, as you might expect. It's the end of the month as well. That's what we're going to look at in a minute. It's been a very interesting November. We've had a great year so far, points-wise, pips-wise. And obviously the changes with the platforms and the availability of the different trading platforms just enhance our offer to you as traders to be successful traders. But whatever approach you take to trade, we're a scalper looking at a few pips gains on the 1 minute or the tick chart, or you're an end of day swing trader like this guy might have been here on the gold chart. See, there's fan support there of that key moving average at $4,000. And it's been long for the last week or so, up to 4,100 plus on the gold chart there. It's all about managing your risk, and that's what we're all about here at theproptrade.com, to keep you in business, basically. So changes to the trading systems are all to benefit you as traders to be successful going forward. Obviously, managing our risk as a business as well as we go forward. So this is a brand new demo account I've got here. You can see there's a 100,000 account here. I've got nothing open. I've got no history to show you at the moment on this platform. Obviously, the other platform we've got, which I've used over the years, I haven't used it for many years, is the C Trader platform. A lot of you have been asking for that. So as well as our trading view based trade locker platform, we've got C Trader. So over the next few days and weeks, I'll be going through that and explaining how that works as well. If you're new to that, it's quite not complicated, but it's really aimed at technical traders. C Trader. It's a really nice platform. I've always liked it. I haven't looked at it for many years, but let's have a look what we are going to have a look at today. So obviously the date since I was last with you on the 10th of November, we've had the resolution of the lockdown in the United States, the government lockdown. So data's been coming out. We had the delayed non-farm payroll earlier this week. The main data today is not a great deal. It's Friday. The main data we were looking at has been, or is the Canadian GDP data, which has just come out in the last couple of minutes or so here at 1:30. This is the GMT time frame now, which is what I'm on at the moment. So this is 1:30 my time. So we've had the Canadian data. It's come in much better than expected, minus 1.6% last time. It's going to plus 0.5 of 1% for the quarter. For the month, it's 0.2 compared to 0.1 last time, and 0.2 compared to the inflation. When it talks about implicit prices, that's to do with inflation expectations during the quarter. So that's a bit hotter than expected, but that's been the case in many countries. So the German GDP, the German inflation data yesterday with a similar sort of reading. So later on in an hour or so, we got the Chicago PMI data. If that comes out actually via, it shouldn't be impacted by the Chicago Mercantile Exchange. That's the University of the central federal bank in Chicago issues that PMI data. So see what that looks like later on as well. So better data than expected out of Canada. And we'll have a look at what that means to the Canadian dollar. Let's have a look, run through the markets, where we are today and where we've been since I last saw you. So let's just start with dollar CAD, given that, let's have a look at the USD pairs, given that's been the major move. So here on the daily chart, we were pushing higher, 140, 141 earlier in November. I left you here around about 140, I think it was, wasn't it? Yeah, 140.20 on the Monday when I'd left you. So if we just got we're going to do this for all the markets this afternoon. So we look at the weekly chart. So I left you here at the end of the second week of November, and I was away for the week before last and last week as well. So we pushed to 140. 141 is the key resistance here. I know we've been down again this week, so back to 140 as a key support area. So you can see there on the weekly chart, buys at 140 over the last 6 or 7 weeks. We're back in to test it again this week, and the 21 EMA, as far as the weekly chart is concerned, remains out at 139.34. So nothing's changed there on the weekly chart. We've pushed up. We've got resistance at 141 and support at 140 on the higher time frames for dollar CAD. We come down to the daily time frame, and we've been chopping sideways for the last 2 weeks, basically. Most of the time, hang on a minute, there we are. I've been away. So we left at the low of the range at 140. We moved to 141, and now we're back down to the low of the range, that 140. So we're in this channel. So on the end of, excuse me, you can see the buys at 140 here during November. And sellers at 141. So tight range, 100 pip range for dollar CAD for November. Where do we go for December? Well, again, too early to tell, but as the weekly chart we just had a look at suggests, more consolidation at this range. So a break below 140 and significantly into December, you want to be looking at 139.40 as support area. You can see that there. Hopefully you can see that there. Yeah. It's interesting being away. I mean, sometimes clarity comes more so when you've not been staring at your charts for a while. But you can see clearly 139.40, which is the previous resistance area, support area tested here towards the end of October. And then we rallied, all the way to that 141, almost 50 zone on a day basis. On an end of day basis, we got to 141 plus, couldn't hold it. So that's a key down area going into December, 139.40, and before that we got 139.80 below. If we breach the key 140 level to the downside as we go into December next week. So range bound really, and I say the key levels 140 and 141 for dollar CAD. Obviously this week we've been weak, big down day on Wednesday as we came back under the 21 EMA. Big down day there on the 26th, and down again Thursday, and down again so far today. Dollar CAD performing better this week, and that GDP would have helped that. So if we come back down to the 5-minute chart time frame, There's the anticipation of the GDP, and we moved down, 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 down. Data came out here at 13:30, so we've got buyers today at 139.92. So we breached the 140, and then that's clearly just put the line in at 140 there. Clearly, buyers at the big round fat 140 following that GDP data better than expected from the Canadians. So Canadian dollars weakened a wee bit on expectations that maybe more cuts to come. So today it's been short. This is just a 21 EMA. I haven't got my setups. I wonder how. Hopefully, we'll be able to. Let's just rename this one. We'll call this one our. Let's do this one. Our crossing EMA. So that uses the 21 EMA here, and we'll add another indicator. We'll add a crossing EMA. We'll have our EMA cross, which is the 5 and the 26, as it defaults here on Trade Locker. You can see that, hopefully. And I'm going to change that to my settings, crossings. So, oops, what the settings of this one? Oh dear, I'm a bit rusty. Sorry. I want the settings of this indicator. I don't want it. I want to see it. Show me settings. There we are. So inputs. I want the 9. I'm happy with the 9. But I want the 5 and the 9. Remember, so I want to be the 5 is my short one. The long one is the 9. So 5, 9, and 21 are the ones I use. And I'm going to change my 21 actually to a different color because it's default. I'll leave that as green and gold, and I'll change my magenta one. Sorry, I'll change my color to the. Oh, hang on a minute. Change my color to the magenta, which is this sort of pinky color. Let's make that pink. Okay. And I'll make that 2 because it's the biggest one. Okay. So there we are. So there's the we call this is our crossing exponential moving average strategy. We'll also insert the ATR. That's my favorite. We can use the ATR both for setting. Oh, it's a bit dark as well, isn't it? Can you see this better? Is it better dark or is it better the white? Let's change the settings on that one as well. Settings. Make that. Bright blue one so we can see on that blue. There we are. So our ATR here for dollar CAD is 5 and a bit pips. I just thought 5.5 pips here in the 5-minute time frame. So that's our default setting on the crossing EMA strategy. And you see the cross was there. That was last short there. And again, so if you've been using this setup this morning, you'd have got short here at 140.44, and your stop loss would have been up here at the turn of the market, and down we go. Retrace. We're still above the 5 and the 9. The 5 is the orange line. The 5 is the green is the green is the 9. The orange is the 5. The magenta is the 21. So we're in nicely aligned, nicely down, and that's our standard crossing EMA strategy. And we use the trailing stop loss as we go down, or we use a break of the 9-period moving average to get out on the completion of the candle. But here we obviously spiked through it there, but stop loss trailing down ahead of the data. It could either got out ahead of the data and bagged your short profits or stayed through the data and still be short because we haven't closed back above the 9-period, although we've spiked through it. The candle hasn't closed back through it. It looks like it's going to do that. But again, 140 would have been a nice target as well. Big fat number there. We went as the data came out, went as low as 139.92. That's one to look today. So we'll see. So the forex feed should be okay as far as derivatives and the CME is concerned. Things like gold and silver and some of the other options maybe. Down. That's our short 5-minute scalping strategy. So my brain's starting to fudge. I'm a bit discombobulated from flying back from Tokyo the other day. But here on the hourly chart, you see significant down candle here at the 130 candle. Big one down there too, breaking the low of the day, and down we go. And again, it's been looping lower all day. There's the 28th. Obviously, yesterday low volume, so be careful given the lack of US markets yesterday and today. And obviously, it's a very, very low volume, limited session today. Many people take Friday as a full holiday, although the markets are actually open for a limited time here in the United States. A normal trading day here in Europe, but obviously impacted by the United States. Japan, which is where I've been for the last 2 weeks. Fascinating country. We've had a great time in Tokyo. Thank you for asking. And lots of news swirling out of the out of Japan while we were there. The major news was political, where the new prime minister upset China quite significantly when she talked about defending Taiwan into attack, and it was the wording she used was quite forthright. Remember, there's still a pacifist country, Japan, following the Second World War, and the rebuilding by the United States and their own people. But as the economy grew really significantly post Second World War, recently, 20, 30 years, some would argue, a moribund economy. And there were signs of that when, we were there just looking at it, the sort of, subjectively as you wander around the shops. Obviously, coming from Europe and the UK and Japan and the US, the yen is hideously weak. So everything seems very, very good value in Japan. The first time I went to Japan many years ago, it was a very expensive place to visit, and certainly as a tourist, but that's changed significantly over the last 10, 15 years. And as you can see here on the daily chart, in fact, actually, as we all know, it's been a very, very weak year for the yen. We were our strength was here in the late spring at 140, and since then the yen has just sort of gone backwards. So 160 is still a target level. There was chatter earlier in the week about the fact it was Thanksgiving yesterday and limited markets today. There may be some intervention from the Bank of Japan to strengthen the yen this week. That hasn't really happened. As you can see here, we stalled. Perhaps we have seen this stalled from last week's big weakness as we went to 157.80. We've only been, I'm saying only as high as 157.20 this week, but the weakness in the yen persists. Meetings between the head of the central bank and the new prime minister and her new financial minister, talking about a big stimulus package that she's talked that was released earlier in the week as well. It hasn't helped the yen too much, but it's been okay. So the weakness has stalled. The rally to 160 hasn't happened, and we're back to 156 today. So you can see sort of sideways action this week and low volumes, but still that trend remains very much set. So what we'd be looking for here, really, for a move for the yen would be a break of that 21-day there at 155.15, and we're trading at 156. 20, a full 100 pips above where we are at the moment. So the yen weakness still remains in place. And if we look at that against the other major currency, we put the JPY in here, you can see the Aussie also 100 back over 100, 101, 102 today. So it's had another lift this week. The Aussie against it. Euro 180.66. Down a bit today, but again lifting these highs that we got to on the 20th there, 182. And the guppy, the cable, the sterling against the yen, 206. Here on Wednesday, we got to 207. Wednesday, we were flying out of Tokyo, and at the airport, they were offering £220 yen. So buy your sterling back at 220. Huge, those airport rates way off the mark. But there you go. That's changing your money at the airport. So the weakness in yen persists despite this fiscal stimulus package that was announced earlier in the week. It's sort of it's a bit too early to say. It maybe have cooled the weakness in the yen, but clearly it doesn't look like, just looking at the markets and the volumes, that has been any significant intervention from the Bank of Japan. It still might come today. It's the end of the month. It's Friday. There's limited volumes out of Europe and particularly, obviously, the US with that half-day trading in the US. So watch that later on if you're still trading this later on today. So yen remains weak. Backspace. Where else are we? We're looking at the dollar generally. So if we just go back to the dollar and its major crosses, look at the euro, 115.75. So the dollar's come back somewhat. Again, remains sort of in a target rate again for the euro, and look where we are for the month. The dollar remains relatively on the week. Last week we've recovered somewhat this week, over 50% of last week's decline to 115, but 115 doesn't want to break. We've been testing it for a while. 115.75 today, but you can see the trend is still to the downside. We've had a consolidation over the last few weeks, which has flattened out the 21 moving average here on the weekly chart. So we're right into that resistance now, 115.75. So there may be some sellers as we start the new month next week at 115.75, right on that key moving average here for the weekly chart. The daily chart this week, excuse me, a bit of a sideways action again. So there's that the breach of 115 from earlier in the month. So euros come back somewhat, but can't break and hold much over 116. Middle of the month, we got to 116.30, and then it's been down and retraced since then. So sideways action again, but you see the bias is still sort of looping lower. These lows are lower. That's higher than that one. So is at the end, a bit too early to tell. The highs are certainly still going down. So consolidation, sideways actions for the euro. Obviously, the big driver remains what the Fed will do. When I left back on the 10th, it was looking like they weren't going to go again in December. That was diminishing quite significantly. I think I made a note of it, didn't I? On what it was. It was 10-year was at 4.13 on that Friday, 3 weeks ago today. Layoffs. The government was still shut down. ADP had been better than expected. The private payrolls, the non-farm payroll since then has come out, still showing some weakness. But really, it was the announcement from the head of the New York Fed, John Williams, saying the economy is in a shape where we can look to possibly cut again. So expectations for a cut on when they next meet have risen. And again, this is still, although obviously this feed from the CME, there'd been no feed since yesterday, and obviously yesterday was a close day. We're still 85% chance of now having a cut, another 25 basis points cut on Tuesday, 15% chance of no change. When we left, there we are, a month ago, there was a 90% chance, and we went all the way down and come back up. So a chance of no change was only 9% a month ago. 3 weeks ago, I say when I left, it was around about 30%. Come up to about 40, 60, 50% at some point at 1.45%. And now we've gone all the way back down the other way, and we are expecting a 25 basis point cut when the Fed next meets in 2 weeks' time on the 10th of December. Okay, so dollar relatively okay, but really consolidating there against the euro. We've seen that. We had a look at the CAD. We had a look at the yen. Sterling, big story this week has obviously been the anticipation of the UK much delayed relative to tradition UK budget on Wednesday on the 26th. Sterling's risen on the back of a lot of disappointment out of the budget. There was no the tax rises, the income tax rises that had been that touted that the press had got hold of earlier, sort of the leaks or potential leaks. How much of it was really going to happen or not? Only time will tell if that's actually the case. But some of the press call it U-turns, not trying to increase tax, but income tax. But basically, the big news is really the freezing of allowances, which basically drags more people into the tax regime. So ordinary people will be facing much more of a burden. Have increased the cap on allowances for more than 2 children. That was holding a lot of families in poverty, those with more than 2 children. That's been relaxed, and that's been touted as a very positive social change for many families. Again, supporting their core voters, but many are saying it's a bit too late. Anyway, it's their most unpopular Prime Minister in Sir Keir Starmer and Chancellor in certainly in living memory, and from having a massive political and electoral win, a big landslide. It was very thin, many of the constituencies, but there's been a big swing politically to the right in the UK, unfortunately, and a big division, as there is in many parts of the world. And the middle ground seems to be lost somewhat, and Labour Party having secured that huge majority, and now looking like they're running second and third in many constituencies. And the new Reform Party, led by Nigel Farage, is riding very high in the polls, although still a long way to go before this next general election in the UK. But anyway, we'll see if they can revive the economy. But again, just reading it on pure economic terms, from trying to create growth, which is what Rachel Reeves was trying to do in the United Kingdom, there's nothing in that budget that looks to growth to me. Yes, there've been a lot of fiddling around the tax situations, but a lot of it has been political announcements in that tax budget, in that tax regime. There were some changes to pension contributions, but not as dire as many had thought. There was some increases on tax, which many are seen as positive, but it's not generating a great deal of income government. And there's some changes to our pension contributions as well, which again isn't changing a lot of garnering a lot of income for the country. It's basically ordinary working people seem to have taken the brunt of this budget. And the chatter around wealth tax, taxes on held wealth, whether it's land, whether it's property, whether it's portfolios, hasn't happened, and there's no chatter from the government around that, and that's disappointing many on the left and many of the progressives. So there we are. It's lifted sterling. We're up. So sterling here again, scale at 132.20. The lower the month was earlier at testing the 130 range, but we are now above 132, quite significantly following the budget. So that's quite a clear move high. And you see here on the daily chart, this strategy would have gone long here on Wednesday following the budget at 132.40, and still holding that to the upside. Yet stop loss, initially down all the way down here. I pulled it up a wee bit since now because we've held to the upside. I just let me flip to the FTSE index, by the way, on the back of the budget as well. 9,700. So as I was leaving, as I left, it was a very strong rally. We've obviously had that big panic and the shakeout on the stock markets globally. The FTSE went short again, but again on Wednesday, the FTSE went long here following the budget. So the sterling's improved and the FTSE's improved, which is unusual. They're going in unison as the Treasury market, the gilt market in the UK, came under pressure. But she did manage to please, the fiscal bears in the government and outside. So she's tried to. Rachel Reeves, with a budget, has kept this fiscal prudence in place. It's just a bit disappointing there wasn't anything a bit more radical to try and either generate more significant support socially, I would argue, or economically to stimulate businesses and growth. It wasn't anything there for businesses in that budget. So it's not as bad as many thought, but it's certainly not as good as it potentially could have been. But she's tread a very difficult line, and overall the market sort of okayed it. It's just politically, it's not. I don't think it's gone down very, very well at all. Although stock market's up and sterling's up. Anyway, it doesn't affect the stock market, and the sterling doesn't really affect many ordinary working families here in the UK. So where was I? Sterling. Let's have a look at the Aussie and the Kiwi. And we had a look at the CAD. So the Aussie 65.35. Remember, we were talking about .65 for as long as I remember, can't we? With the Aussie, as I left the markets here, we were still holding that 65 area there on that Monday. Again, we slumped to 64.20 last week, and we've come back this week. A big move here again on Wednesday. Aussie going long here at 65.16, and that's into the top of the range for November at the moment, 65.40 for the Aussie. So again, sideways, actually, a bit like we saw in the Euro. And the Kiwi is just an exaggeration of the Aussie, but Kiwi's been particularly weak, 57.20 at the moment. So come back quite strongly, having looped much, much lower at the early in early November, and then again here in late November went to 55.80 under .56 for the first time in a long time. Just put that on the Kiwi expectations. We've had the central bank also reporting 56. Come back to this 56. Okay. Yeah, if you're talking about gold, Anjan, I don't know when you. Sorry, I've just seen your comments here 10 minutes ago. Sorry, Anjan. Yeah, it's. I mean, it's beyond our control, really, as they say. It's CME, a major supplier to brokers around the world. So just stay. Guys, if you're desperate to trade, that's the wrong sort of mindset. When things like this happen, stay away. I closed my November account as I left to go on holiday, knowing I was coming back. It was Thanksgiving. Very, very thin markets, very low volumes. Yes, there's opportunities. There's opportunities always around. So don't go chasing it. Wait for your setup to trigger, and by all means. My captions aren't on for some reason. There we go. Make sure you always trading with great risk management, because that's really what it's all about, guys. Remember, we've got our promotions on as well at the moment. I'll come to that in a minute. Anyway, sorry about the dollar, the Kiwi, very, very much under pressure into 56. I say we haven't been down here. This is the daily chart for the Kiwi here since April. So late spring, we rallied all the way to .61 in the summer, but since then we've been looping lower, and this remains still quite weak. Although we have recovered very significantly on Wednesday following the RBNZ, back through 57, or at 57.20. So big, strong candle on Wednesday. it's led to more buyers, and we're into this pivot area now. See at 57.20, it's previous low zone here. So this one may go to test 57.75 to the upside, next pivot area for Kiwi. But you might see some profit taken from Wednesday's big rally through here, but that's certainly a big positive Wednesday for the Kiwi. Okay, there's the major crosses. The other majors, let's go back to the others. Obviously, crypto has continued to unwind. We highlighted that to you before I went away. But I wasn't perhaps expecting it to unwind as much as it did. Here on Monday, the 10th, last time we looked at this, it was sort of consolidating above 100,000. We're about 105,000. We'd broken my key pivot through 112. Remember, that was what we at 112 area and the 107 area. Let's move that to 100. That's about 112. 107 was the bottom of that range through there. And that's what we were looking for. That breach really significantly at the beginning of the month. The bounce, as I was leaving there on the Friday and the Monday, didn't look. It looked okay as I left here on the Monday night. As I switched everything off, because we'd recovered 50%, over 50% of this big down candle we'd seen on the 4th. But the momentum was very small, and then the Tuesday, Wednesday. And then the key move there was Thursday, the 13th, as we produced new lows. And then we just continue to unwind as we breached the key. Let me just put that down. The key psychological 100 level there. And that was providing that support level we've been talking about in that first week or so. So the weakness we'd identified way back here when we breached the 21-day here up at the 112,000. That's why we were going on about it so much. Again, looked like we had support 107, and then it was 100,000. But then the breach happened significantly there on the 13th, and then all the way down here to last week when we went to 80,600. We've come back since then, but again, it's a weak sort of bounce up. So we still remain well under the 21 EMA at 93,475. But we've had a better week. We've moved up. And looks like we're crossing the short-term 5 and 9 crossing EMA. Looks like it's looking positive today, Friday, as we come into the end of the month. Obviously, we can trade this Saturday, Sunday as well. So it's a 7-day trading there on Bitcoin. But, I'm not interested in this till we see a significant break of the 21 EMA at the moment. We remain short, or that remains short. This is a bounce from the low to the upside. So the Bitcoin in particular under pressure technically, and if we go to the weekly chart for Bitcoin, we can see the weakness was identified much earlier, much more perhaps clearly there on that rejection of the 112 and then the break of the 107. Massive week down there the week I went away as we went under 100,000, then down again last week, and a bit of a bounce this week. But 100,000 still seems a long way away as we trade at 92,400 on Bitcoin. Oil was a bit moribund, and it remains moribund, 58.96. So it got even weaker since I was away. What's the weekly charts? That's why. And not really one that's trending anywhere. We had a down day a few days after I'd gone on the 12th, but we were sort of sideways, and we were waiting here on WTI for with the 62, 65 win range had been breached. We'd been as low as 57 towards the end of October, and now we're really on sideways, but more buys to the downside during November. And that's been the case the last 2 weeks when I've been away as well. Sort of nothing to get too excited about. It was a big down day on the 12th on that Wednesday, and but we haven't been able to hold and break significantly the $60 level here. Put that in. And so the big fat round number pivot area of 62 we've been under now for 1, 2, 3, 4, 5, 6, 7, 8 days. and the technical range we had at 65, 62 was also had been breached earlier. So it's biased to the downside, oil, but really not a trending market, not really a trading market on this particular setup for me. Brent, similar, so we're a few dollars higher from 65 as the support, and we're at 63.23 today. So oil also, you can see there with Brent, lower highs, lower lows. Trend remains to the downside. Where's the big support low? Well, it was through here at around about $61 on Brent as well. So $61 was that low we got towards the end of October. We haven't got that low in November yet, but we are biased to the downside, even though November, December tends to be quite positive for oil markets. So we're moving down. Forex, I had a look at indices. It's been really quite interesting, hasn't it? The almighty valuations for the AI stocks continues to hold up. Markets, Nasdaq, most exposed and vulnerable to any worries and panic about the AI stocks, the tech stocks, high valuations. Are all these data centers going to get used? What happens when it perhaps doesn't? Are they overinvested? What's the valuations? But the money, the money is phenomenal numbers, and it's just throwing it at these big, the tech seven, the mighty mega, and the big movers. So panic ensued whilst I've been away. Panic, I don't know, it's a healthy shakeout, I'd say. Mild panic, but you can see 24. You can see very clearly here 24,000. It was the pivot area that we've moved into. That was a big spike there on the 10th of October. The paddy from the president, and we went in to test that again this month as well. So before we found buys this week, and we've moved up this week, but this is starting to look a bit weaker, to be honest. The last time we had a week, December tends to be quite strong. The Santa rally they talk about. The last Santa rally, it didn't happen. Was tariff version 1 from Trump back in 2018. But overall, December is normally quite a positive month for stock markets. Now, a lot of it's to do with the cash and the tax situation. In the United States, people hang on to these gains into the end of the year before they jump up. Certainly, there was a certain move down again, but you can see that move down. So again, I'm going to do this on the indices. So if that move is over, which it certainly looks like from a sort of a fib level, we've come back to test the key 61.8. So we need to break where we are now, basically here on these stock markets. If we're going to show, we're going to move to new all-time highs for the end of the end of the year. If not, the move down could be extended. So this is key as we go into the new month. 25,500 there on the Nasdaq. We'll do the same for the other major stock markets, but we've had a phenomenal run. Obviously, profit isn't profit till the trade is closed, and that's what's been going on here in the second half of November. Market participants' portfolios now looking forward to churning their market, which is what they do in this window here in December for 2026, and expectations of a more dovish Fed. So stocks could continue to move here. There's many are saying at least 2 years growth in the AI boom still. So there's still lots of money not invested. So still lots of places for it to go still, other than tech. It hasn't seen this broadening of the stock markets that many were talking about. Although third quarter earnings were very good, the impact of tariffs and the government shutdown might have a further impact for fourth quarter earnings. But we'll find out first 2 weeks of January. But as far as December is concerned, it's looking quite positive here. Really, there'll be profit being taken at this fib level here from this rally. Those that caught the bottom here at 24,000. Again, on a daily basis, it was Wednesday that took us through the 21 EMA for the first time in a while on the 26th. So let's see if this is just balancing up for the end of the month, ahead of the Thanksgiving holiday and the end of the month, and then see how December kicks off next week. But that's one to watch. And the other markets, the US markets certainly are looking very, very similar. The S&P, 6,825. Less exaggerated the decline from the S&P, but if we look at from the all-time high here at the beginning of November to the low that took us to 6,500 in the S&P's case, 6,500 from the Trump Paddy Day. Again, back through the 21 EMA on Wednesday, and more important here for the S&P, already bursting through the 61 fib. That's the 61.8 fib here on Wednesday, and then up to the next 78.6. One I personally don't use, but I know many fib traders do, and that's the cap so far for the S&P this shortened Thanksgiving week. But you can see it's been a positive week from the last week's panic and shakedown into 6,500 from the all-time highs up here at 6,900 at the beginning of the month, the end of October, for the S&P 500. And finally, the Dow, 47,500. We're just under it actually at the moment, but similar fib from the all-time high here to the low, and it's so it's a similar pattern to the S&P, less vulnerable to interest rates. The Dow, the industrial company, so strong move back again through the 50 on Tuesday, through the 61.8 on Wednesday, ahead of the stock market close and Thanksgiving on Thursday. So strong buying this week from the shakedown last week. So we're back up and 47,480. But again, I'm not sure, this is probably not open given the problems with the CME. So it's 2:15. Let's have a quick see if there's been a change from the CME. That notice is still up there. So I haven't got any feeds that will. Is that note gone? There we are. That looks like the notes may have gone. In fact, it has. So it looks like they've resolved their issue. Let me just check my. Let's go onto some live feeds. So I've got you here. So the so CME futures options forex traders. I lost liquidity in contracts go lower. It's really in Bloomberg story. Let me just find that Bloomberg story for you. Sorry, was my chart gone? Oh, did I lose my chart? What's happened? Oh, excuse me. Sorry a minute. I've lost my chart. Where's it gone? Chart's gone. So that's not. Oh, hang on a minute. Where's that? Where's my account gone? Where's my trade logger gone? Where's my chart gone? Oh dear me, I don't know what I've done there, my friends. Sorry, I must have closed it, and it's on. It's there, isn't it? Oh, sorry about this. I'm a bit sound a bit fuzzy at the moment. Sorry, that's my trade. So what was I talking about? I was talking about the Dow outperforming the Nasdaq and the S&P. So it's back over its 61. The S&P has got back to its 78.6 from the all-time highs at the beginning of October. But the Dow went to new all-time highs here as I was leaving in the beginning of November. So it's good short, and now it's triggered long again now on Tuesday, back over the 21 EMA and to the upside. Here in Europe, we had a look at the FTSE, the DAX, my favorite scalping strategy. Again, following the dollar indexes, the dollar indices topping here as I was leaving that week, and then big move into under 23,000 this time. 24,000 was the other pivot area. Remember, 1,000 connections lost it. So what's going on? And we're sort of back. And again, another one that's gone long here on Wednesday. But remember, guys, it is the end of the month. It is thin trading because of the lack of volumes for the US. Shortened week. Japan was closed on Monday. The US closed yesterday. Very, very shortened day today. Add the CME futures and options problems from the CME. And, I'd just sit on my hands and stay away. Don't try and try and make profit out of this market. And remember, guys, it's all about protecting what you have and start again for December. That's certainly what I did, knowing I was going away for 2 weeks, and we closed November at we were up 1,209 points and 35 for November, or for last week of November. Let's show you where we were. My trade chat is where we were. Where we are now. Toby, I'll try. I don't know. Is that Ravi getting wrapped on the knuckles? Yeah. So for that first second week of November, we were up 1,209 points. Again, it was that massive move we saw in the Nikkei, and that's my close for November. And as I say, I'm back today. And I'm nothing's. I didn't take any trades last night. That's far too bit out, discombobulated yesterday. Addy, thank you very much for that comment. And we'll be starting again for December on Monday. So join me for that. I think we'll be looking at. I'll put up the list of opens, but we'll trade the open on Monday for the DAX. Get back into trading on the. With our Trade Locker platform next week as well. I'll go through the C Trader platform. Those of you that have been asking for it, obviously experienced traders. Those of you are new, it's quite a technical platform. It's great for trading. It's great for coding and programming. It's much more. It's a nice, intuitive platform, and really aimed for active traders as well. So we'll have a look at the C Trader platform as well next week. But in the meantime, take care. Enjoy your weekend. Those of you that starting Christmas shopping as well. Those of you celebrating Christmas, take care out there. It's a bit crazy. Remember, it's Black Monday, Black Friday today, Cyber Monday on Monday and Tuesday. So if you've got the cash, do invest it. These companies need it. If you haven't, best of luck. Sit on it and stay care. Let's have a look if we've got a movement on the gold. No, we've the markets are moving. Be careful as the gold 4195. So it's been a positive day so far for gold, but I'd stay well clear of that given the lack of what's going on, lack of feeds and everything. So stay out of that would be my view on that, my friends. Okay, take care. I'll see you all again on Monday. Be good. I'll be a bit more on the ball on Monday. So just quick review of the data today. The Canadian data came in better than expected. Canadian third quarter GDP came in at 2.6% versus expectations of 0.5%. So positive move there. The dollar CAD, as we saw earlier, moved to weaken the CAD on that expectation. That was stronger than expected. So we'd dollar CAD had been down all morning, and it's moved under 140, and it's bounced up on the data, but then it's continued to weaken. So there we go. That's been wiped out. So that was the data coming out, wasn't it? Here, the initial bounce under 140 went to recover, and there we go. That's why I say, even if you're trading this on a short-term basis, just stick with it. Although it had the this strategy from being short up here at 12.35 remains very much short. If you'd got your stop loss a bit too tight on these 5-minute time frames, you might have been taken out. But that was recouping, and then the other what's just happened now here in the last 5 minutes or so is that we've gone to a new low of the day, below the low of where we were when the data broke there. So we still got the PMIs from Chicago as well to come out later on. So and watch any chatter from the president on post Thanksgiving. Obviously, the big announcement was all to do with immigration again, following the shooting and the killing in Washington, using the term third world countries, which hasn't been used for the best part of 20 years. But there you go. That's Trump's expectations. Anyway, take care, everyone. I'll see you all on Monday. Be good. And as ever, may the pips be with you. See you all next week. All the best, everyone. Have a great weekend. Bye-bye.